Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the weekly time frame, the bullish scenario, where we have a 5-wave impulsive structure to the upside. It's always good to sometimes zoom out. Now inside this yellow wave 3, we then look for a 5-wave internal impulsive structure in green, 1, 2, 3, 4, 5. Common target for your wave 4 has been touched, the 382 to the 05, and the common target for your wave 5 is up here, 78.6k to 110.6k. Now as you can see, that's a very big area, it's about 40%, but based on the lower time frame structures to the upside, with information that we still need to get if price then eventually moves to the upside, we can get more specific on the lower time frames. After wave 3, we look for a wave 4 to the downside, where it is common for a wave 4 of a higher degree, which is the yellow count, to retrace to the price section of a wave 4 of a lower degree, which is the green wave 4. So therefore, if you take a box from the high to the low of the price section of the green wave 4, which you see over here, then it is an interesting target for a wave 4 in yellow, 73.8k. 56.5k, and then we look for another impulse to the upside in a wave 5. The bearish scenario is a bigger flat. Now of course this has the lowest probability at the moment, right? And you can also see my writings here with the horizontal line. So what we're looking for here is then a flat ABC. Now in this particular case we then have a 3-wave A, 3-wave B, and then a 5-wave C, where currently B is at the common target for a regular flat. So the most common flat structure is an expanding flat, where the target is up here, but this is a regular flat, less common, right? And then we want to see an impulse to the downside, 1, 2, and then 3, 4, 5. The probabilities for this scenario, or at least a deeper retracement, will only really increase if you at least hit 49.3k, which also is the invalidation for the bullish scenario here, 49.3k. However, you preferably want to change the market structure over here, and 38.5k is really the level where the probabilities would increase for more bearish scenarios. Because at the moment on the weekly time frame, the probabilities are higher for the bullish scenarios. There's no reason to think differently. We just have a range over here with some moves to the down as well as the upside, and also price here on the daily time frame hit the 886, taken from the high to the low, and the 886 is a common target for a wave B or a wave X. It is a rare target for a wave 2. Therefore, it increases the probabilities that this move down is a corrective structure, either in a wave C or a wave Y, after which we then expect continuation to the upside and continue the trend on a weekly time frame. Now if we then zoom into the scenarios here on the daily time frame, then of course your most bullish scenario is that your wave 4, right, the higher degree wave 4 is finished, and you're looking now for an internal lower degree 1, 2, 3, 4 and a 5-wave structure. And after wave 5, remember on the weekly time frame, you are then finishing the yellow wave 3, and then we look for another multi-month range in a wave 4. The common target for your wave 2 is the 618 to the 786, taken from the low to the high, 62.4k to 59.8k. So we are now at the golden pocket. This wave 2 so far is also good with regards to time. We are currently ranging after the 0.382 fib time, taken from the start to the end of 2, which is a minimum target for a wave 2 as well. So that is positive. Now inside this wave 2, right, we have two scenarios actually, but I present you one here for now, which is a zigzag in an ABC. So therefore we extend this range sideways in the summer months, which is something that is common when you look at the history of crypto and you look at the summer months, having a more ranging structure instead of all-time highs and pushing actually has a higher probability. So this is quite interesting, where here we then have a diagonal 1, 2, 3, 4, 5. All of the waves are 3-wave structured. So we have a 3-wave 1, 2, 3, 4, and we look for a 3-wave in 5. The invalidation for this scenario is 60.4k. Now, in this scenario, after wave 5 and therefore wave A, we're looking for a move to the upside in your wave B, right? And wave B has to be a 3-wave corrective structure. Common target is the 382 to the 886, taken from the high to the current low that we have on the chart, 65.8K, 70.8K, and in this area, a few additional areas of resistance. So we have the blue box here, 66.6K, 67.1K, then 69.1K to 69.7K, and then the 886. It's not really the most common target for B, but nonetheless here, another blue box, 70.8K to 71K. After wave B, we then look for a wave C to the downside, which also has to be an impulsive structure to the downside, a 5-wave move, which then takes the low of your wave A. Now, another scenario that I will cover in a bit more detail in the live stream is a WXY double zigzag or even a triple zigzag in a WXYX and then look for a wave Z. But again, that's something I like to cover in the live stream as that is very complex price action and I like to explain a little bit more in a live stream this afternoon. The most bearish scenario is continuation to the downside. So here we then have a zigzag, a 5-wave A and a leading diagonal, 1, 2, 3, 4, 5, corrective B, and then a 5-wave C. The B in this scenario is a bit of an issue because this move to the downside counted as a 3-wave corrective structure, which is what you need in a wave B. You need a 3-waver. Is very difficult. It's very difficult to end a 3-wave structure here. I should actually say it different. There's low probabilities that a 3-wave corrective structure finished at this high in particular. However, your wave B has to end at this high. And that is because on some charts, this high took the high on the left. And if you look for a zigzag in a 535 ABC, we can't end wave B here because they would need a wave 1, 2, 3, 4, 5, but wave 2 on some charts took the start of wave 1, which isn't allowed. That's an invalidation. So we have to put wave B on the high here, but it's not great probabilities because then we need a 3-wave structure up here, but we can't count a nice zigzag in an ABC, preferably that would end here, not here, right? Second, a double zigzag WXY, wave Y didn't take the high of W on some charts. Minimum target for Y is all the way up here. This is not a flat. This is also not a triangle. This is not a sideways ranging WXY at the moment. So it's not great probabilities for wave B to end at this high. So that of course limits the probabilities for an impulsive wave C down. But nonetheless, the targets for your wave C, 1 to the 1.236, 54.6, 50.5K, which means we do need to drop through some areas of support. We are at the moment at the golden pocket, taken from the low to the high of B, of course. Locally, some support, 61.4, 61.6, 60.5, 61, and then we have 57.9, 58.3K. On the low time frame, that means that we then need to look for an impulsive structure to the downside. If this is the high of your B, again, the probabilities aren't too great, but if this is the high of your B, we need to count an impulsive structure, right? 1, 2, and then we have a 3, 4, and a wave 5, finishing a wave 1. 3 wave, 2, and then another 1, 2, and look for an impulsive 3. In this case, we want volume to increase. And this is something that's quite striking about this move down, is that the volume is decreasing as as price is moving towards the downside. When we look at an impulse here, preferably we see the volume increase, especially now, because now we are looking for a wave 3 in white of a bigger wave 3 in blue. So we want volume to increase, impulsivity to increase. We don't want price to range too long here. We just want to drop, right? That is what you're looking for. Now, by all means, the 0.236 that you see taken from the start to the end of 1 is a very rare target for a wave 2, lowering the probabilities for this scenario. The most common target for 2 is the 0.5 to the 786 Fibonacci. The 0.382 is an uncommon target. The 236 is a rare target. We rarely ever see a wave 2 bouncing on the 236, right? So it doesn't give high probabilities to this scenario at the moment. And again, if we are really bearish, we need volume to increase and lose significant areas of support without ranging there for too long. Now, finally, we have a sideways double combo WXY. Flat in W, flat in X, zigzag structure in your wave Y. What lowers the probabilities in this particular scenario is the internal count of your X. So wave X here is an expanding flat A, B, and then a 5 wave C. Because if we can count this a wave 1, we are also able to count it a wave C, because a wave C is always a 5 wave structure. And in the bullish scenario, 1, 2, 3, this is also a 5 wave structure. So we can then count it a wave C. Now if we count A, B, C for an expanding flat, your wave C, however, is more than double the length in time of A plus B. And this is something that significantly lowers the probabilities that this move up is a wave C in the sideways WXY, so inside wave X. So that also doesn't really support the probabilities for this scenario where you're looking for a wave Y, where the common target area is big, the 618 to the 1.236, so 613 to 50.6K, that's cool. It's just that your wave X here is a bit of a problem. Now, if we do at least put your wave X on this top and we look for price to move down, then instead of an impulse, 1, 2, and then eventually 3, 4, 5 to much lower prices, we're looking for a zigzag to the downside. So here it's pretty much the same, but instead of a wave 1 and a wave 2, we have an A and a B. So here we have 1, 2, 3, 4, 5 wave diagonal in A, 3 wave B, 1, 2, and we look for a 3, 4, 5 to the downside in a wave C. Then again, that means that now we're looking for a wave 3 to the downside. So what we want to see is price continue impulsively, volume increasing as price is moving to the downside. Now for a wave 2, the 236 is incredibly rare. For a wave B, it remains an uncommon target, but it is more common for corrective structures to reach a 236 or, for example, the 886 than it is for impulsive structures, like, if you look for an impulse down in a 1, 2, 3. So it would be better for a wave B compared to a wave 3. Now locally on the 1 hour time frame, that is actually quite clear here. Price is moving to the downside. And we have a little bit of increasing volume, as you can see, right? So the probabilities yesterday were higher to look to the downside to create a wick on the daily candle. We got the move down. There was no support. Every bounce we had, right, had bearish CVD divergences, had local 3-minute 886 touches, and I'm happy to show this on the live stream as well later today. Now, at the moment, we have the highest amount of volume in the low. So if we're looking at an impulse to the downside, where we have a wave 1, 2, and then we look for a 3, 4, and a wave 5, right? Most commonly, the highest amount of volume is in your wave 3. That means we still want to see a 4 and a 5. The 0.618 at 63.6K is an invalidation for a wave 4. The targets for your wave 4 are the 236 to the 05, so 62.6 to 63.3K. If price can move towards the upside here and touch the 63.6K level, it will switch the local probabilities to bullish. As long as we do not, the probabilities locally are higher to take this low and look for lower prices. Now, as mentioned, we are currently at the golden pocket. We also have some additional support to the bottom here, and also talking about support, we do also have the golden pocket in confluence with this daily order block here, right, where we are as well right now. So yeah, that is something to keep in mind. But local probabilities moving down on an increased amount of volume. If price can hit 63.6K, the probabilities will increase for price to move towards the upside and look for the highs to be taken and price to have a bit of a bigger bounce. But as long as we do not at least get a significant range here or hit the 618, the probabilities would generally be higher to look for the low to be taken at some point. So we have a very clear probability change on the chart. So if we then finally look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are higher for the bullish scenario. With regards to bearish scenarios, they only really start to be relevant if you at least take 49.3K, which, we're at 63K at the moment. On the daily time frame, the probabilities are higher to take the all-time high first, before maybe at a later stage 56K, but at the moment high probabilities to take the high instead of the low first. On the 4-hour time frame, the move towards the downside here from 72K is a structure with lots of overlap on the lower time frame, lots of three-wave structures to the downside as well as the upside, and volume is declining as price is moving to the downside. If we really want to become very bearish on the lower time frames, we would need to see the volume increasing rapidly, and price has to lose the local areas of support quickly as well without ranging too much. So the longer the range is locally, the more bullish it is, because at the moment on the 4-hour time frame, the probabilities would still be higher to start looking for a bit of a bounce towards the upside and signs of strength. On the 1-hour time frame, right, price is moving to the downside on increasing volume. We're currently at the golden pocket taken from this low to the high. We have some target areas, right, some boxes just below price at 61.6 and 60.8k. As long as price is moving down on increased volume, the probabilities are higher to still take the local low and continue to the downside, right? Because if we're looking for an impulse, 1, 2, 3, 4, 5, most commonly your wave 3 has the highest volume. Currently on the lower time frame, 1 hour, the volume is in the low. So you would like to see a 4 and a 5, right? Now the probabilities only switch to the upside if we can hit 63.6k, which is that 618 that I have shown. I hope this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.